All right. Good morning, everybody. Welcome to the morning show here on Stock Market TV. You know the crew. It's me, it's Steve, it's JC, Alfonso, our chart wizard. It's you in the chat. Today we're joined by Adam Koos from Libertas Wealth Management. We'll be on about a half hour or so. We got a lot going on as always, right? We are still in the heart of earnings season, right? So we got Uber, we got Lyft, we got Shopify, we got Reddit, we got Intel earnings just out. Not great Intel. What else is new? We'll see what's on the guys' minds as well. We'll see what's on your mind in chat. Good morning. Drop us a like, please. Thank you. Okay, enough about me. Let's start the show, shall we? Let's do it.
All right, ladies and gents, we are back. Happy Wednesday. I saw a camel this weekend. Camels are cool. Hump day. I did. I saw a camel. It was in the zoo.
Went to the zoo?
Yeah, I went to the zoo in New England. The Smithwick's Zoo. Fantastic. Let me just tell you.
Where was it? What town is this in?
It's in between Providence and Boston. Smithwick Zoo?
No state it's in then.
Oh, it's in Massachusetts.
Okay.
Speaking of zoos,
they have a full bar, full restaurant that people were going to that weren't even going to the zoo. That's how awesome the bar and restaurant is at the zoo. Cool. Like the zoo was closed and we were leaving because we have kids, so we leave places early. We get there early, we leave early. People were showing up just to dine at the restaurant in the zoo. I was fascinated by this whole concept. I'm in.
Well, and you also just love zoos, right?
I do love zoos. I do love zoos. They had a hell of a playground at the zoo and a petting zoo. Hello. You could go in, you could pet the goats. They had baby goats.
Yeah.
They had alpacas.
What was the best zoo animal?
Honestly, man, I've never been this close to a tiger in my life. Like tigers are pretty badass, like obviously, right? And like, usually they have like a moat in between like the people and the tigers. And they did have that, but you could go around to the side where the lions are. Mm-hmm. Man, I was like 5 feet away from, a Bengal with like these giant paws. It was pretty badass, dude.
Yeah, it's a big cat.
It's a big cat.
I had 3 different people tell me that to go to the Omaha Zoo. The Omaha Zoo is apparently this like the legendary zoo. I didn't go, but apparently the Omaha Zoo is really cool. Fun. Who knew?
All right, you guys just spent 5 minutes talking about the zoo.
This is the Southwick's Zoo in Mendon, Massachusetts. Big ups to the Southwick Zoo. Big ups, Mendon, Massachusetts.
All right. Great.
Let's do it.
Let's do it.
State of the markets.
All right, so we got Dow futures are down this morning. How do we feel about that? We've got Dow futures down 66 points. It's about 17 basis points. Not a big deal. It's the S&P futures down almost 0.5%, 20 points on S&P futures, back down below 5,200. NASDAQ futures leading the way lower this morning, close to 0.2% to the downside. NASDAQ futures down over 100 points. 30-year bond futures back in the red. Good to see you, buddy, back in red after a nice little bounce there off of last week's lows. That's front and center. Gold is flat this morning, hanging out near 23.25. Silver also flat, 27.5. Copper's getting hit today, down up 1.6%, down to $4.55. Crude oil also down 1.33%, down below 78 this morning. Dollar slightly higher, particularly against the yen as that rolls over. Volatility index 13.5. And then, of course, over in the funny money, you've got Bitcoin flat this morning, Ethereum flat this morning. So just under 63,000 for Bitcoin, just under 3,000 for the Ether, and Solana just under 150, down 2% on the day. Total crypto market cap, Spencer Israel, $2.22 trillion. What stands out from the futures this morning? Oil.
I mean, not much.
Oil down again. Bonds not up, right? So that's back. Dollar bouncing, right? So dollar and rates up this morning, I think, is probably the most important thing going on in the market right now.
Yeah.
Is that about right?
Yeah, the little snapback rally in the cryptos is fizzling for now. And futures, really nothing. Stocks have made a nice move for 4 or 5 sessions now. So they'll give back. Okay. It's fine.
Yeah, I mean, listen, we got a big day today. It dropped. Spencer actually just dropped the note today at 4:00. We're going to talk about income generating strategies. It's actually one strategy that we incorporate, and this is always something that we want to be doing throughout the year. There are certain times that are more advantageous to be generating income. There are times that it's easier to find assets that are paying you handsomely to collect income. It's not always, sometimes it's harder than other times. Right now, volatility is down, even though the markets in general are messy. There are opportunities at the individual stock level and ETFs that are paying you to sell that premium. So we're going to talk about that today at 4:00. But this environment where most indexes have gone sideways for the last 2-3 months, some of them 4 or 5 months, or even longer, is a nice reminder that there are uptrends, there are downtrends, and there are sideways trends quite often.
So the link to that is pinned to the YouTube chat. It's also in the description on YouTube. It's the very top link right there. Check it out. 4:00.
Yeah, so like for example, the S&P 500 is literally at the exact same price it was 2 months ago. The Russell 2000 is literally at the exact same price it was 4.5 months ago. You look at the Nasdaq. You look at the Nasdaq Composite. The Nasdaq Composite is basically where it was in early March, same levels it was 2 months ago. These have been messy markets, right? I mean, that's just what it is. The Nasdaq 100 is at the same level it was 3 months ago, right? So just a lot of, up, down, chop, chop, chop. What ends up happening is you've got a lot of investors that lack patience, that lack discipline, that are trying to force the types of strategies that worked really well in last year's environment, full of sector rotation, strong uptrends, breakouts were working, they were sticking, they were heading a lot higher. Over the last few months, for most of this year, that simply hasn't been the case. So there are other types of strategies that are much more advantageous. And today at 4:00, we're going to be talking about that. So hope you can join us. It's going to be fun. This is not something that I used to appreciate as much as I have over the last, let's say, 5 years or so. It was not something that I was doing 20 years ago, or even 15 years ago, or even 10 years ago. This is something that I have learned how valuable it can be by collecting income during times like this. Helps us fund future trades, right? So we're looking for higher probability of success outcomes that are going to generate the cash needed to fund a trade maybe a month from now, maybe a week from now, maybe 3 months from now. That is going to be a lower probability of success trade, but with an exponential reward if we're right, right? So that's how I like to think about it. It really adds up. Really adds up. So in the time horizon, generally we're looking 45 to 60 days out, but that doesn't mean that we're going to be holding the position for that long. A couple of weeks ago, we sold puts in Berkshire Hathaway, for example, and we hit our target in 3 days, right? So just because we're looking 45 to 60 days out doesn't mean we're going to hold it that long. In fact, usually we don't.
I like selling puts in this environment.
Depending on the situation, you can sell puts, or you could sell puts and calls, right? It really just depends on the scenario. In NVIDIA a couple of weeks ago, I think you and I were both really surprised just how wide we were able to go to sell the calls and puts and still get paid, right?
Yeah, I just worry we might look back and say, yeah, we should have just sold the puts.
Maybe.
The way this one's been moving. Yeah.
But we'll think through it. We'll think through it later this afternoon. So you guys got that link. I got a chart for you there, Strazza.
Yeah.
Let's look at some of these returns since October. Slide 2 here. Tells an interesting story. Look at Argentina, man. Absolute beast. Right? Look at Peru, up 50%. 50% for Peru since October.
Yeah.
Colombia up almost 40%. Mexico. Notice how you have to get down to the 5th and 6th here to get to American stuff, right? So just monster leaders at the individual country level, right?
These banks out of South America are just ripping.
Yeah.
Looks
Well,
so
in some of
good.
these cases, they're considered regional banks, but it seems like they're doing other things also, right? Go to slide 3, zoom out a little bit. This trend really got going early last year. Look at Argentina, almost doubled off of since the start of last year. Peru, Colombia, Mexico, right?
Colombia's got a sweet base. I like that GXG.
Look at the Peruvian index slide. The next slide there, Spencer.
Isn't a ton of that just the BVN dragging
No.
ETU higher?
No, actually, it's not.
It's like 10% of the fund.
BVN is not. It's funny. So we'll get to that in a minute. BVN is actually a pretty small market cap. So no, it's not that dominant at all.
Not
Why
small
don't you
for Peru.
look at this 16-year base, Strazza? How many bases are this big out there?
Yeah, and it looks good in dollars too.
Look at this base, Strazza. I feel like you're unimpressed by such a beast of a
I'm
base.
unimpressed only because you did this exercise when you did the monthly call last week.
Oh, so you're saying that you're just jaded because you've seen this a million times?
No, there's a lot of all-time highs and a lot of massive bases and base breakouts when you look at these global indexes, especially when you
16
look
years
at
though. Oh, I guess you're right because you look at Europe and you're looking at 20-year basis, 25-year basis. All right, that's fair. All right.
Yeah, man.
Strazza's at this point, Strazza's so bougie with his bases that 16 years is like, drop in the bucket.
BVN is the third largest holding. It's not nearly as big as Southern Copper, but it's third largest.
You're looking at EPU.
Yeah. Yeah.
Look at the next chart. So this is what Strazza's talking about. So here you go, Strazza.
Yeah.
Tell me why you're so excited about this.
This was a hot corner name that popped up because there was just a massive institutional purchase. And I think they've been adding since then, but that's where you got the ramp up and then something just like high and tight. And this one just keeps going. It's been a really good name. Commodity super cycle. I think it is more than appropriate to look outside of the US, for vehicles, because a lot of the best natural resource companies, or in this case, copper companies or industrial metals companies, are located outside of the US. A lot of them are ADRs, like in the case of BVN, but outside the US. When you're looking for tech companies or growth companies, you could just look inside the US. All the best stuff is here. When you're looking for ways to play commodities or a group like materials or energy, you got to look outside the US because most of the best stuff is not here. And with
I mean,
finance,
you can see it, and by not here, they're headquartered elsewhere, but a lot of the most important ones do trade in the United States.
We have ADRs, but I'm saying you want to look at international stocks, right? So I'm thinking of our international universes. They're hot right now because they have names like Buenaventura.
That was pretty good, Strazza.
Right? Yeah.
That's pretty good.
We talk about it a lot.
Buenaventura.
I did mention Latin American banks. Wavy gets excited. He's been all over them. I think he likes the GGAL. Look at that chart.
You think copper goes?
Mm-hmm. Mm-hmm.
So if copper goes, BVN's probably not going to completely fall apart, right?
No, I think BVN keeps working. I like
How about
it.
the relative strength that we've seen in BVN?
Yeah, I mean, it has a lot to do with what I mentioned, right? The institutional buying that began back in December. You could see it. What a ramp up.
Yeah.
And I mean, it hasn't really corrected much at all since.
No, it's just been consolidating sideways right at those former resistance levels.
Yeah,
right.
It's good stuff. Right.
Spencer, why don't let's hard pivot here. Very interested in what's happening here with the Tesla. This thing's down 7% in 2 days, less than 2 days, right? 1 day and a morning.
Tesla.
What's the big news?
Well, the thing with Tesla, right, is like there's always news, right? There's literally every day there's news with this godforsaken stock and
What's
company.
today's news?
So there was news about more executive departures. They're sending their like top fireman guy over to China to, I guess, be the Tesla czar over there and get shit done. They shut down production at a facility for a couple of days. That's not really going to move the stock at all. I don't know, honestly. This thing, there's so many headlines on
Throw
Tesla.
up the slide 2 there. Strazza, you buying this pullback in Tesla? What are you thinking here?
I say it all the time. Tesla's it's really not for me. No.
Why? Because it's a name that's always in the news and you don't like that? Is that why?
I don't need that. It's a mega cap. I don't know how much upside, is left at this valuation, especially when showing relative weakness like this. I just don't need that in my life. I talked about how different something like Tesla is in my mind than something like Apple.
Speaking of which, let's throw that up. Throw up the new slide 3, Spencer.
We have so many stocks to choose from. There's just some that I feel I'm better.
Why is this one not? So this one is okay for you to spend your time on, and it is something that you might need, but the other one is not. Why?
I just told you, Tesla's incredibly volatile. There's short reports coming out, people trying to short this thing, negative headlines. Elon Musk could be thrown in jail tomorrow or overnight, saying something crazy about the SEC.
So you don't like the random outlier risk? You don't like the random outlier risk in Tesla that you certainly don't have with Apple?
Yeah, especially if I'm trading short dated calls on something like that. That's crazy. So it doesn't really jive with what I'm trying to do. See,
I'm with Jack on this one. People are talking about people hate Musk. It's true, and I love that. That's what makes me interested in Tesla, right? Like that inherent
too, that people are always after him.
I like that.
Yeah,
you're avoiding it because of that. I am more interested because of that.
I don't want to wake up in the morning and because the New York Times did a hit piece on my company's CEO, my stock's down 5%, 10% in pre-market trade.
Who reads the New York
Times?
Times?
Get that with Apple.
Nobody reads the New York Times. I don't think anybody reads that anymore.
There was one headline. Sorry, a Chinese publication reporting that Tesla's sales in China for April were down 18% year over year. I just saw that. So
I mean, if you guys want to talk about earnings, we could talk about Uber, right?
Please.
Yeah, this was an interesting one. So if you just saw the headlines, you would say EPS huge miss, revenue miss, but the EPS is really not comparable in any way, shape, or form. They wrote down the value of some investments that they had. So just throw that number out. It means less than it usually does. In this case, and JC would say, "Oh, it means nothing." I would say, in this case, especially, it probably means nothing as well. So
it doesn't mean nothing, and you can X out the. So they wrote off. I guess they have a number of equity investments. They're invested in mostly common stock and other ride-hailing companies.
Yeah.
But they're always taking write-downs on these. It's like every quarter, EPS missed, but it was because of the write-down. So it's like 700 and something million. I think even if you were to back that out, they don't quite beat, but that's okay. You want to focus more on the top line. So I dropped some stats in. Really, for a company like Uber, it's the gross bookings, right? That's top line. That's revenue. So gross bookings, I think, came in 21%, same as trip growth, right? Which is simply just the dollar value. Instead of just the number of bookings. So I really liked what their CEO said this morning. I was listening to an interview. They're not trying to compete on price. So they got a question. Lyft grew its market share a little bit this quarter. And what the CEO of Uber basically said about that was let them. Because they're undercutting or trying to undercut Uber in price. And it's not a sustainable strategy, right? So the way that Uber CEO was kind of looking at it was, go ahead. right? How long can they actually do that for? I don't know. So he was very clear, we're not going to compete on price, and it hasn't hurt their top line. I like the way they talk about their business. We talked about how it's like an ecosystem play. He talks about his customer base as his audience. So it said it's up 50% year over year. That's really the key here. They'll continue to figure out ways to monetize it. And then the Uber Eats, really good stuff. Gain share in all 10 of their largest markets. They expect the margins to grow, but the business is already profitable. So the revenues were up 17% year over year there. I thought it was a pretty solid report.
Stock is down this morning. The guidance they gave was a little bit light.
Stock's
They
down
gave
9%. Stock's down 9% this morning.
yeah,
So
right.
for a great report, market seems to hate it. The
Yeah.
question is, back to the December highs, Strazza. How many times have we talked about these levels, particularly in Uber? We are literally back to those December highs.
So it's the prior
do
cycle.
you buy it right here?
It's the prior cycle highs, though. Like, I don't know why you keep going to December.
Oh,
Isn't-
because I'm using. I mean, I agree both, but I like both, right? I like the prior. Well, I guess in this case it's both.
Yeah, it's both.
Right,
But
right. Good call. You're right.
in my opinion, the more important level is where prices peaked during the last bull market, right? So yes, the December pivot is there. That's great. 64, I think you can buy against 64 all day. And yes, the reaction, not great. I wouldn't be surprised if this candle looks a lot different come 4 o'clock.
Well, the candle hasn't even opened yet.
Yeah.
So there is no candle.
I have candles. So I have.
I would.
It's a choice that I've made. I have
Let me-
pre-market candles set to on my charting platform.
Let me tell you something. Yeah, I got one of those too. Let me tell you something. Above 66, I feel a lot better being long. Right. So in other words, back above the lows from the beginning of the month. Right.
Yep.
So in other words, fine, kiss those former highs, kiss the December highs, but buy the breakout above last week's highs.
Maybe we could
Right?
talk about that a little bit real quick. I have 2 charts that kind of speak to this. So another way to do that, JC's talking about like looking for confirmation, right? You don't want to maybe buy something on a 10% sell off on an earnings miss. Fine.
Remember, picking bottoms gives you itchy fingers, right? You don't want that. No good.
Jesus. So something like that. But you understand what I'm saying. A lot of times it's probably better to find a tradable low before you get involved in something. One way to do that, like you're saying, in this case, we do have a pretty clean level at the pivot lows. Another thing that I've been doing the past few weeks is, God damn it, I just lost my chart. Drop a VWAP from the pivot highs, right? If you look at any of the major averages right now, and just VWAP them from the pivot highs, the year-to-date highs.
Like mid-February?
Yeah, so we're just recapturing those VWAP levels now. It's February, some it's March, right? So you could do that for individual stocks too. Something like Uber. Okay, I want to get involved. I need some sort of sign that the bottom is in. Short-term low is in. Drop a VWAP from, I guess in Uber's case, it would be the March high or late February high. That comes in right around 74. So that would be some pretty solid confirmation, but that's 10 points higher from here.
Yeah, I mean, I think this is a great poster child because it was definitely a leader. Broke out above those former highs, peaked in February, right? So it wasn't one of the ones that peaked in December, peaked in February when things really started to roll over, and this thing is back to levels from 5 months ago, right? And I think that this is, this is a bellwether for a lot. There's a lot of stuff that looks just like this. Strazza and Alfonso have been all over it. So many things that are retesting those former cycle highs. And think about it, by definition, if you're retesting those former cycle highs, then you have to be a leader because you would have had to have already broken out above those former highs, right? So I think Uber is very representative of a lot of things going out there from the leaders, by the way, from those whether they're former leaders or still leaders, we'll see. But those leadership groups, Uber is the poster child for that.
Yep. This one's been so good for so long, right? And I think with stocks like this, you just want to find a level, and we have a number of them here. Throw up this NASDAQ 100 chart really quick I want to illustrate this point with these year-to-date VWAPs and how we can use them to kind of help us from a tactical standpoint right now.
Year-to-date VWAPs or VWAPs from the highs?
Year-to-date high VWAP.
Oh, got it. Okay. That makes more sense. I'm like, why are you dropping a random VWAP for the year-to-date? Yeah. Year
So-
to date highs. Yeah.
All of my charts look like this right now. Like JC continues to hammer on. A lot of things peaked 2 months ago, some even 3 months ago. Go find that day, drop an anchored VWAP, and once it's reclaimed, that tells you buyers are finally back in control of the short-term trend. So we're seeing it here. Sellers have been in control since March, right? We talk about the equal weight NASDAQ 100 reclaiming its prior cycle highs. We talk about the equal weight S&P 500 trying to do the same thing. All these indexes battling at the prior cycle highs. Confirmation after they recapture them, you want to see this VWAP reclaimed, and we're starting to see more and more and more of that. So this is encouraging. You could do it at the individual stock level and use that as an entry.
This is what we like to call a hot mess. Strazza is right. Short term, we're above those anchored VWAPs off the highs. It's a hot mess with a hat tip to the bulls, as opposed to a hot mess with a hat tip to the bears. But it doesn't change the fact that it's still in a range, right?
I got a good question. Yeah, right. I guess it's still rangy short term until it makes new all-time highs, right? But primary
Something's got to make a new high. There's just nothing making new highs like at all. So I mean, it's not just this one. It's really anything. Let's see anything break out to make new highs. Right?
Nothing's
And then
making highs.
Not really. No. So
Plenty
let's
of stocks
start getting that list, start perking up. I don't necessarily think this is going to be the first one to start making new highs. Do you?
I can quiz you. How many stocks made new highs yesterday?
How many stocks made a new all-time high yesterday on which index?
I got 52-week high.
I'm talking about all-time highs.
I don't know, 20, Steve, maybe?
I don't have the all-time highs in front of me.
How many all-time highs? What, on the New York Stock Exchange or the NASDAQ 100? If it was the NASDAQ 100, I'd say probably close to zero. The New York Stock Exchange, you'll probably find some that are making new all-time highs. Not a lot, but certainly more than the NASDAQ 100.
I don't have mine like sorted by exchange or anything, but I see about like 25 just based on large cap.
I think Strazza, I think you want to see, I think you're probably going to see some stocks. I think you're going to see some industry group ETFs making new all-time highs first before some of these indexes resolve higher, is my suspicion. I guess we'll see.
212 on NYSE yesterday.
212 all-time highs?
52-week.
Oh. Yeah, I'm not really worried about those. I'm more interested in the all-time highs.
All right.
220 on the New York Stock Exchange, so that's like 10%. That's probably more. That's more than I thought.
So I was asked.
Are you looking at everything on the New York Stock Exchange, like all 4,500, or are you looking at the 2,200?
Common stock only.
So it's about 10%. It's more than I would have thought.
Yeah, I mean, my point is that they're there. I think we're getting some sort of rotation away from large caps, or at least the large caps that we're used to talking about. But every morning, we're coming in and there's a long list of companies that are up 10, 15% with nice earnings beats. So
and a long list of companies that are down 8, 10, 12%
not
too.
As long, frankly, not as long. I could use today as an example. So, like, what am I talking about? We have, oh boy, 1, 2, 3, 4, 5, 6, 7, 8, 9, about 20 positive earnings movers today, and only 3 negative movers in large cap land. No, I'm sorry. We have a lot more than 3. It's more like
Palantir down 15% yesterday. That's another classic, just messy market, right?
Shopify. What happened with Shopify, Spencer? No good?
It's a little wait, am I on? Yes, it's a little thing called earnings. So if you want the numbers, let me give me
20%. This is the sort of thing that did not happen last year, by the way.
Give me 5 seconds to pull them up, and then we'll bring on today's guest, Adam Koos. But
there's no reason to be long this anyway. Keep that
there
right.
We are.
Let's remember that.
They expect margins to decrease year over year in Q2, but the backward-looking numbers, the numbers for last quarter were all right. So it looks like some weak guidance is what they gave. I mean, obviously the stock is down 19%.
All right.
Dawson says everyone using VWAP makes me think that VWAP loses some of its luster. Let me tell you something, Mr. Dawson. Sure. 99.99999% of humans on this planet have no idea what a VWAP is.
Yeah, use something
You're
else
good.
if you feel that way.
What?
Use something else then.
Yeah, use something else. Don't use it. Yeah, but don't not use it because you think everyone uses it when 99.9999999% of humans have no idea what it is.
So I got a question on it the other day. If you want to throw the chart back up real quick, where do you know? Where do you anchor a VWAP from? The closing high, the intraday high?
Whatever's going to fit your narrative is the answer.
Also, there's no right answer, right? When I don't know, you could drop VWAPs from all over the place. Drop it from the closing high, drop it from the intraday high, drop it from the highest volume day of the year, drop it from the first day of the year.
Events also, like earnings or, an FOMC, like if there's like a big move off of an FOMC or a payroll number or whatever.
Because guess what's going to eventually happen? It's going to be above all of them, right? So if you're not sure, anchor 4 of them.
Yeah, exactly. That's exactly right. For sure. Anchor off the lows, anchor off the highs, anchor off a big event, depending on the situation. Like, because some of these stocks don't have a big event, so there's nothing there. And depending on your time horizon, 1 day, 2 day VWAPs are very, very valuable also, like for you day traders out there.
They're all going to converge towards the same level, which is the current price.
The market respects those levels because it's not like a smoothing mechanism like a moving average where there actually is no history there. They're just invisible lines with pretty colors on them. Like those 50-day moving average, 20-day moving average, 100, 200-day. Like those are just invisible lines. Like those are not things that exist, right? It's just a by definition, a smoothing mechanism. You are smoothing out the noise of the data. That's all that those moving averages are. This is different, right? Because this is a volume weighted average price that actually does impact supply and demand dynamics. It's not an invisible line. It actually does exist, right? There is market memory at these levels, right? So that's the difference between the two.
It's the best indicator.
That's what it means to me. I guarantee you ask Brian Shannon, he's not going to disagree with me, but he'll tell you 10 other reasons why it works. Strazza will tell you other things. For me, it's that simple. The difference is one's an invisible line, one isn't.
Throw up this Solana chart real quick. Then we're going to bring Adam on. There's a comment in the chat about how good it works on crypto. I know, and it just happened again. Throw up this Solana real quick. Just drop the VWAPs. All I'm doing here is that every little new higher high that's made, I'm dropping a new VWAP, right? This is what my charts look like. Might not publish them this way, but I got VWAPs all over them.
Drop a WAP.
Look at the WAP from the March high. Rejected again. We got to get above that level. Buyers need to regain control of the short-term trend and momentum for a crypto like Solana if Bitcoin's going to be above 70. Really believe that. So
can we get the homie Adam Koos on?
I just had a really good idea, but I don't want to spoil it. Like a good idea for a video about VWAP, but I don't want to spoil it. So we should do a video about VWAP.
Well, thanks for sharing. And
thanks. Yeah, that was a great talk.
All right, you want to know my idea? My idea is we do we write like a Dr. Seuss book about VWAP. It's really easy to rhyme with, right? So like 1 day, 2 day, 3 day, 4 day, like 1 fist 2. Okay.
I hate it.
It's all in here. It's all in here. Trust me, it's all in here. All right. Adam Koos.
Hopefully it stays in there.
Libertas Wealth Management. Let's bring him on.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Adam Koos in the house.
Can you guys hear me okay?
Oh, yes.
All I
He's
see is a
Hungarian
blank screen
legend.
right now. Oh God, yeah. Hardly. I'm not. Am I supposed to be seeing something? I see a blank screen.
No, you're good.
All right. Well,
Adam, you're in both studios right now, but you're in our main one as well. So you're good. We see you. We hear you.
Right.
We hear you.
There we go. I feel like a 70-year-old right now trying to deal with technology. Sorry about that. I've got it fixed. I can see you all now.
The files are in the computer.
And you're nice. and as soon as I'm done with this, I'm going to take a screenshot and put it on the line. Yeah.
Love it. Love it.
And by the way,
on
JC,
the old block and chain,
I counted 5, by the way, 0.99999% earlier.
Yeah. You think that's accurate?
I'd probably, yeah. I mean, there's probably room for a 0.000001 in there, I suppose.
I mean, how many
Um,
people are in this world? 8 billion? Is that the latest
that's
number?
probably good. Yeah, not enough
8
food,
billion?
sure.
So how many people you think actually know what an anchor VWAP is of that 8 billion?
I think the 0.000001% is probably pretty accurate. I don't know.
I think so too. I appreciate that, Adam. So we're getting comments that we should have a VWAP rap video about
I'll produce it.
VWAP, and you are in a prior life, you are a former rapper. Is that not
And
true?
that part was a secret. You weren't supposed to out me like that.
Oh, I
But
wasn't supposed to out you like that. Oh, that's my bad.
but since it's done, yes, I used to do some singing and I did some rapping but more importantly, I produced a lot of music. So I will volunteer my services to produce the track. I don't know about the rap part. I feel like that should be you. I mean, you're the face of the morning show, among other things. So I don't know. I mean, we can help. You probably won't need any coaching. You'll be
I don't
fine.
know. Adam Koos, former member of the Wu-Tang Clan.
Yeah. I could come up with a couple other names that would be inappropriate.
Staten
to
Island's
avoid that.
finest over here.
Yeah, right.
All
Rapping,
right,
right?
Adam.
WRAPP. So it's Wavy
Let's
McFly.
talk
Yes,
about
rapping.
something. Let's talk about something that actually matters here. Had a little bit of a messy market over the last few months. Chop, chop, chop. Up, down, up, down, up, down.
Yep.
I haven't spoken to you in a few months.
I know. We're
On
too
the
busy with
phone
our
or
kids.
online. Like, where's your head at? What are you thinking?
I mean, it was getting interesting there for a little while. We only had we run 18 model portfolios, 10 are strategic, 8 are tacticals, trend following models. And what was interesting, and this is something you and I have talked about for years, is that you don't tell the market what to do. You don't front run the market. You're not a trend predictor. You're a trend follower. And so what I found really interesting is, regardless of the fact that there was still is some sector rotation happening, while there was clearly a pullback happening, I only had a couple stocks break down that we had. So it's like, as I'm looking at the high RS stuff we own, and nothing's really breaking down in trend, I thought, okay, well, it can't be that bad, right? I mean, you watch the news, you watch the FinTwit community, and you're kind of waiting for something really bad to happen or for the bottom to fall out, but that just wasn't happening. But there was and still is some rotation, I think.
Yeah, definitely. You look at the Nasdaq 100. The same price it was a few months ago. Nasdaq Composite, same price it was a few months ago. S&P, same price it was a few months ago. Small cap, same price they were like in December. Like, just a lot of things are just chop, chop, chop. When you go sector by sector, industry group by industry group, you'll see a lot of similar themes. So can you tell the folks, about your day job, about the investors that you represent, that you work with, and how you think about environments like this?
Sure. My time frame, just because you got done talking about VWAPs and the legendary Brian Shannon, right? The originator of, or at least the person who made it famous. There's day traders that go to cash every day. There's swing traders that their time frames, a few days to a few weeks. There's short-term traders, which would be 1, 2, 3 months maybe. My time frame is one step up from that, so I'm 6 to 9 months, 6 to 12 months. I'm an intermediate term investor. We are a fee-only fiduciary RIA in Central Ohio, Columbus, Ohio. And what we do is we work with both business owners, helping them with helping them make work optional someday. We help them with their 401ks, their personal assets, retirement planning, investment management, and then we help also the other segment we work a lot with is executives, working professionals. So C-suite, D-suite, SVP, VP executives, people with complicated retirement plans and assets that are kind of confusing. So, like I mentioned earlier, we've got 18 portfolio models. 8 are tactical, 10 are strategic. Every one of our clients, we've got about 350, 360 clients. Every one of them owns 1, 2, or 3 of those models. Everything's block traded, very simple. So we can watch them literally every day of the week and pay attention to what's going on with everybody's money on a daily basis. But that's what we do. So we're a financial planning investment management firm, and then we do a little bit of business advisory services as well. But my love, even though none of my clients really, well, I shouldn't say none, even though I'm going to do that, even though 0.0005% of our clients actually enjoy talking about this stuff, I really love sitting here and burning through charts. And obviously that's how you and I met.
So of your clients, most of them don't give a shit about what the market's doing. They don't want to talk about it. It's that few that are actually interested. That's surprising.
I think that there are, I think they care to the extent that it affects them. I only think most of them care what's happening if the market's going down, if they're losing money. They want to know why and what we're doing about it. And as long and that's not everybody. I mean, a lot of people just they say, we pay you to do this. It's like wedding crashers, just build me a bike. So a lot of them, they just trust us to do what we do, and they don't call, they don't email. But the small handful that do call, they do email, that get worried when things start to get rough. It's usually just reassurance. They're looking to make sure that we're paying attention. We know what's going on. We're reacting to whatever's happening in the news or in the markets. And then I would say out of 350, 360 clients, that I could literally think of the people. One of them actually I met through your show. I gotta give you props here. We have, I obviously can't say their name, but we met a new client because of my first appearance on this show last year. Thanks to you. So I appreciate that, by the way. But yeah, probably 3 or 4, 5 maybe out of 350 that would enjoy a conversation about stocks, ETFs, charts, technical analysis. That's it.
No, I mean, I appreciate the shout out. That's the second time this week that someone tells me that. I was on the phone with somebody who got a $2 million account after coming on the show.
This was a $3 million account, by the way, and then they just referred us another $4 million client. So
look at that.
You're just like JC Parets is like, it's like JC Helicopter Parets.
We're making a raid around here, baby. I listen. I appreciate you. I'll take the credit all day, but I'm pretty sure you had a little bit to do with that, and some of these others as well.
A little bit.
So I'm curious your thought. You're OG TradFi bro, right? I don't know how orange pilled you've been. I don't think you've been as orange pilled as I have over the years. But how do you think about cryptocurrencies, the new ETFs? Have you incorporated that into your practice at all? Are you still are you ignoring altogether? Like, just how do you think about that? How do you talk about that with customers?
I've actually, two things. I have no problem with cryptocurrencies, digital assets. I was just on another podcast last night with a guy who's pretty famous here locally, anyway, in Central Ohio, and he was asking me the question, what's better, stocks or crypto? And my answer to that question was, I feel like you get yourself into a lot of trouble, whether you're an investor or a professional, when you start answering in black and white like that. And I mentioned to him, and he hadn't heard of it, but I mentioned to him Annie Duke's book, Thinking in Bets, and instead answering in probabilities. So for me, I like to stay open-minded about things, especially dealing with the fact that I deal with the retail market, the average Joe investor. So I've been watching and analyzing crypto for a long time. I think now that it's become so, I don't want to say it's become an asset class, but I think it may have at this point. I think we'll know in 5 years, and we'll be able to look back and say it has or not. But I've been looking at these things right now, looking for an entry to put in our clients' portfolios. So I'm just looking for a good entry right now. So no, I have no problem with it. I think it's I don't want to call it a diversifier because that word kind of annoys me, being that I like concentration more than I do diversification, or diversification as they call it. So I think that whether it's BITO, the Ethereum ETF as well. I think that I've actually, with a couple of our friends, we'll have to talk about this another time. I've been looking at building a technical analysis RS-driven strategy that switches between Ethereum and Bitcoin, and then adds a trend following component.
That's funny. I built one of those, so we
Did
should
you already?
talk
Yeah.
offline. I got a good one for you.
I've got a great back test on it. It's phenomenal.
Yeah, I've done the back test too. It actually is pretty good. We'll talk about it later.
All right.
How we think about it, and we've given this a lot of thought and gone back and forth about, is it another asset class? Is it just more software stocks? Like, what is it? And I think that we've all come to the conclusion, at least me and Strazza and I have, that the way we look at cryptocurrencies is as another tech industry group. So in other words, it falls within the tech sector. So we just look at it as other stocks, essentially. It falls within the tech sector. It's not software. It's not cloud computing. It's not semiconductors. It's not hardware. It's crypto, right? So within tech, you've got all of these different industry groups, right, that kind of trade together, but are doing their own thing, and putting the entire cryptocurrency universe as an industry group within that sector wouldn't be the smallest of the industry groups, wouldn't be the largest either. It would just be one of the industry groups. And that is what I think makes the most sense to me. And Strazza agrees, which is rare, us agreeing so much. But
yeah.
What'd
you do, by the way? Where is he?
Like a
you drown him or something? Did you put him in a closet?
Diversifier, I think, right?
Did you put him in a closet somewhere? Where's Strazza? Oh, there he is.
Hey,
He's putting his clothes on. He's just putting his clothes on. That's all right.
Strazza gets frustrated because I take all the questions from the best guests.
Oh, well,
Sometimes he just likes to do the interviews without me, so I give him. It's his moment.
Okay, well, to answer your question, I've never heard of it put that way, and I actually that makes a lot of sense to me. So yeah, and I think that
We're
it's
like
probably
really
gonna
weirdos that think about this and talk about this
Yeah.
way too much for way too many years.
We have a lot
I
of
love
time to
it.
talk about markets, believe it or not. But
No, but
Adam,
I think that
Bitcoin
makes a
is
lot of
a Mag
sense.
7 stock. Bitcoin is a
Again?
Mag 7. No?
No,
Oh no,
no.
Yeah, it is.
no.
Sure it is. I'll show you why.
Oh come on.
I
is
want to
Bitcoin
say
not
no,
a Mag 7
but I
stock?
know
Come
his
on.
data is going to confirm it probably is.
Well, what makes a Mag 7 stock a Mag 7 stock? I would think it's the correlation.
Also true. Also true.
Their cap size and the correlation. Yeah. Right?
Correlation, but there's not. I mean, okay, you proved to me the
You
correlation.
if you overlay the Mag 7 ETF with Bitcoin, I can't imagine it looks too different.
No way. Yeah, you're about to
So
blow
I
my
hate
mind.
to
Look at him.
I hate
Look
to
at him.
say that Strazza is probably right, but
They're the
yeah.
same thing.
It's like but that would be chart crime, right? I mean, that would be like people looking at 15 years in the market and overlaying some other time period to say that
Would
this
it be
is
a
what's
chart
gonna-
crime?
I don't think so. It would be a chart crime if their volatility characteristics were that different, but they're not. Like Bitcoin, at least over the past 2 cycles, it doesn't have crazy vol. DraftKings or Coinbase is so much more volatile than Bitcoin.
All right, I'm just gonna listen.
Chart. You talk
I've got
amongst
nothing.
yourselves.
Adam, let me ask you this. How are you thinking about natural resources in this environment?
I mean, we've got a very, very, very light weighting right now. Again, I think that's part of the rotation. That I think that's where the market was going. And when I say was, I'm not saying that it's not going there because I don't know. But there's obviously been a stall in the energy area. I mean, I think about fundamental things like travel season's coming. You think of some of the geopolitical things going on, but that's not what I do. I'm not a fundamentalist, so I don't sit around here looking at what's on CNBC to make my decisions. But I mean, we could see a bid in natural resources, whether that be energy. I think that if interest rates work in our favor, you could see gold doing better, silver, obviously. I think that if inflation goes down, that's going to be a headwind. So you've got a few things working, I guess, kind of in tandem that I think it ends up being neutral in the end when you look at outside indicators. When you look at, say, gold, for instance. However, when you have that breakout that occurred this year, and there's no more sellers above you, with the exception of shorts and profit takers, I think that there's a good chance, not good chance, I shouldn't say good chance. I think that there could be something to say for gold long term here.
And then metals in general, copper continues to act strong. Yeah. Gold mining stocks hanging in there very well. It seemed. And then for me, it's less about the fundamentals. You're not a fundamental guy, neither am I. But it's hard to ignore the positioning. Not that that's fundamentals or anything, but the positioning or lack thereof from investors in this space. And investors are just not in it.
Yep.
Right.
The same old people.
That makes it very attractive to me.
Yeah. I mean, once it starts to get famous, all of a sudden it's supply and demand at the end of the day, right? More buying enthusiasm than selling enthusiasm, price must rise. More selling enthusiasm than buying enthusiasm, then price must fall. So if we get people jumping on the train and building momentum, yeah, for sure.
And how do you express something like that? Are you looking at individual stocks? Are you looking at maybe some ETFs because it's tougher in the commodity space? I mean, not with gold, not or energy for that matter, but how do you express that for clients?
I try. I'm in a unique position just for the you already mentioned the punchline there, but because I'm working with the retail client and some people just absolutely hate K1s, I have to be careful on the commodity side of the fence. But so I do like to focus on ETFs. I don't have any problem with mining stocks as long as they're obviously from top down. If commodities is a leading asset class, then from there drilling down to what type of commodity, call it, let's just say it's gold miners, then from there drilling down to the highest RS stocks within the commodity market, or I'm sorry, within the metals market, within the commodity space, and that's where I'd be looking at individual stocks. But when it comes to things like copper and silver and gold, I'm looking at ETFs that ideally don't pay a K1, and at the end, like oil, oil K is the symbol that you can own oil, but it doesn't kick off a K1, which is nice.
What about other countries around the world?
Same story. I don't have to worry about K1s too much with other countries. Right. I typically, if I like, I think I sent you a chart, and you don't have to pull it up, by the way, just an RS chart between US and ex-US. And we're seeing the international market's starting to just touch that line. You can see them at the upper right hand corner there. I don't know if that's going to hold or not, but we all know on this show here that there was a time last year, early in the year, and late last year, where international markets were starting to look good. The dollar was struggling, and so right now all it is oh, I wonder what's going to happen here. Is the U.S. going to continue to outperform, or is this going to be a pivotal moment? But it's way too early to say. But if we were to see this chart and some other things change, then I would start looking overseas at first and foremost ETFs like EEM and EFA, depending on relative strength. And then from there, I would drill down into countries, whether it be, Latin America, Europe, Pacific Rim, and so on. So I'm pretty agnostic about where I go. It just has to be where the strength is.
I think it would make sense to see this ratio finally turn.
It would. Yeah.
But isn't that just a tech story? If tech is an underperformer, then this line's going to go down. If tech is an outperformer, this line go up. Am I wrong, or is it just that simple?
Growth.
I don't know. I'm not. I guess I haven't analyzed it like that, so I'm not sure.
Look at the ACWI-X, and you look at the weightings. This is a great chart, by the way, Adam. Look at the ACWI-X and look at the weightings. You are looking at the All Country World Index ex-US. And you're getting 13% technology. You're getting 14% industrials. So the financials are about the same as the US, maybe a little bit more, but you're getting almost double the industrials and less than half of the technology. You're getting double the energy. You're getting 4 times the basic material exposure. So you're getting much more exposure to industrials and natural resources and a fraction of the technology and growth.
Would you say small versus large is a tech story too then?
Yeah, I would. Well,
no.
I think interest rates have a lot to do with that story too. I think
it's probably more rates.
We've been
probably more rate sensitive than technology specific. If when you look at it, because remember, technology is still the largest component of the Russell 2000. Fun fact.
Are large cap tech stocks rate sensitive stocks?
I think I'd say they're less sensitive.
Yeah, that's probably right. That's a good answer, Adam. I agree with that. Right, Strazza? That's probably right.
Yep.
We've been leveraged in small caps for quite a while now. Went in, got out earlier this year, and then got back in about a month or two ago. I can't remember when exactly.
That's been the trend in small caps. Frustrating.
Yeah,
you're out.
Patience, though. I think you got to be patient here. I think if you're a swing trader, you're probably getting chopped up. But I think for my time frame right now, the line in the sand that I'm following it continues to hold. In fact, I think it was 2 or 3 weeks ago where it crossed below that line by about 0.1% on Friday. And I always usually give a position to the European close at 11 on Monday before I'll cut bait on something that's fallen below my stop, and it jumped right back above it. So at some point here, and I think I have a chart I sent Spencer, just IWM, and it's not really a sexy chart or anything like that, but it's basically just showing a nice symmetrical base being built over a long time period. We all of us on this call have seen this many times, and then the most recent pullback didn't get bearish or didn't fall into a bearish regime when it comes to momentum. So if we get above that, I didn't draw a line there, but if we get above that line of potential resistance there, we're not only a few percent away from it. All of a sudden, we can start seeing shorts cover. We can start seeing people pile into small caps, and I think some of that could have to do with interest rates, of course. But I think Powell saying that no, we're not going to raise rates anymore was a step in the right direction. But if we start to see cuts at some point here, or an indication of future cuts, I think that could really help here.
Yeah, and let's remember what this is exposed to. A quarter of this index, in terms of the components, are regional banks and biotech stocks.
Mm-hmm.
So you got 500 of the 2,000 are banks and biotechs. So you want to talk about rate sensitive.
It's a real problem for the Russell 2000. I don't know how they fix it.
And by the way, I'm glad you said that, JC, because I totally forgot about this, but I just have this note handy. So I was speaking at the NAME conference a couple weeks ago, and one of the other speakers, he had some really good statistics about commercial real estate. And he threw up a chart and he said that commercial real estate debt is mostly held at not regional banks or big banks, but at community banks. So more than 50% of that to be distressed debt is held at your community banks, whereas the big banks are holding 10 and 11% respectively, and that's it. So while regional banks might be something people are worried about in the small cap space, I don't know that the reason to worry would be commercial real estate. But you have things like loans to value have dropped by like 5 to 15%. So, at these community banks, if the people who own real estate and are leveraged have to, refinance every so often, they come back to the table, loan to value goes up. If they pulled cash from their real estate, now they got to add cash just to keep their loan in force. So that could become a problem.
And you know why this is? This whole dynamic that you're describing is very different. Like when you say it, wow, community banks own most of the commercial real estate. That's unusual. Why? Because years ago, that was never the case. It was the big banks. And then we had a financial crisis. And then there were a ton of new regulations and net capital computations and focus reports that had to be filed. And now you have the big bank CEOs, they'll come on and they'll complain about how they're capped in a sense and can never be as profitable as they once were. It's because they're not allowed to do the risky shit that they used to be able to.
Right. Well, and then for that reason, you've got the community banks that will, you go to Chase, you go to Huntington, you go to Fifth Third, you go to, any of these big banks, and you try to get a commercial loan, and the cap requirements are so huge. They were huge before, but they're going to be bigger now. So you go to the community bank and they're like, well, I'm in your community. I know you. The underwriter's right here upstairs. You just got to go up the stairs and talk to the underwriter. And that was a good thing, obviously. But if people kept pulling money from their real estate for the sake of refinancing, getting some tax-free cash, this could become a problem in the future. But again, not for regional banks, not for small caps.
It's an interesting dynamic.
Yeah.
I've been saying it. The big banks are becoming more and more like public utilities. They're just
funny.
You're not going to see them blow up. It would be very strange at this point because they're not allowed to do half the things that they were doing just 15 years ago.
We already had our once in a generation financial crisis. Like it's going to take a little longer to have another one.
It's going to be community banks, like I'm not saying there's going to be financial crisis, but if there's problems, it's going to be the community banks. It's going to be private equity companies because they're taking a lot of this business too.
Before we let Adam, because we got Adam here, I want to take advantage of this. Talk to me about bonds. How are you thinking about the bond allocation? Just short duration stuff? Are you starting to shift? What are you thinking?
We haven't owned any bonds in our clients' portfolio since November of 2021. So
none of them, none of the
zero.
Short-term duration, long, nothing.
All we've owned is 1 to 3 month T-bills. That's it. Sometimes I buy.
What do you buy? BIL?
BIL typically, yeah. I've looked at JPST a little bit, but BIL tends to be the place to be.
That's the go-to everybody uses.
And then for some clients, like clients who sold their companies, and they have assets and they have to pay taxes on the sale, we take their tax money that needs to be paid, in April 15th, and we put that into say 4 to 6 month T-bill, whatever's paying the highest yield to maturity. Then I'll just keep rolling it over until it's time to pay the taxes. But yeah, I'm looking at I'm looking at TLT, I'm looking at IEF, I'm looking at convertibles, ICVT, and it's the allocation to bonds in a traditional client's portfolio is considered a safe asset, right? So in my shoes, I got to be really careful about an entry point here. I don't want to catch a falling knife. I don't want to sit here and go, oh, I think it's going to go up. I'm gonna buy it here, put a tight stop in, and then keep getting chopped up. Buying bonds in a downtrend below their descending 50 and 200-day moving averages doesn't make any sense. So I'm just being patient.
That goes against all your principles.
Yeah, I'm just being patient. I'm waiting for a sunnier day. Meanwhile, I'm going to take 5.4% risk free all day.
Yeah, I like how you think about that, Adam. I really appreciate you coming on.
Thank you, man. I appreciate
Hopefully
you too.
Hopefully you get another 10 milli for the appearance. Send them your money.
Thanks so much, man. All right, you guys. We'll talk to you later. Thanks again for having me on as always.
Later, bro.
All right.
We're just raising AUM for advisors all over the country over here by accident. No big deal.
That's
great.
great.
I think that's the first for this show, at least to mention on the show. Where
of it, but it's not the first time it's happened.
It's definitely not. I'll offline. I'll mention another handful.
All right, first that I'm aware of.
So
we're crushing it for these advisors. They're killing it.
You know what else I love hearing him say? The word regime when he's talking about momentum. I'm not going to say we started that, but I feel like we started that.
Yeah, I did.
You did.
Yeah.
Okay. Yeah, but I didn't hear that. outside of All-Star Research. Circa 2018, it started. And now I hear it everywhere in the wild. I hear it on the networks all the time. So, hey now.
No, Strazza, you're just such an influencer, bro.
Bullish momentum regimes. I like them. Hey, so not many industry groups are above their old highs and year-to-date highs. What if I told you I went and found one?
So
'Cause
an
you're right.
industry group. Well, first of all, I love how you say I found the one because it sounds like it was
There's
difficult to find.
There's a couple, but I knew one.
So you're questioning me. Industry group that's above the prior cycle's highs and is making new all-time highs.
Yeah.
Right now. Is
It's
it one
in
of the
our
utilities? Is it one of the utility ones? Yeah, right. Like the
it's
water or something.
It's in our U.S. industry group ETF universe. That's where I'm looking.
Is it one of the utility ones? Are
It
you
has
smiling because I
utilities in
nailed it?
its name, but it may or may not be utilities.
Because there's like water utilities, and then you got the electric utilities.
Throw it up. Did I even
Am I
share?
close? How am I doing? Come on. Am I close?
Here's the chart.
I feel like you're pretty close.
Hey, one for the good guys. Look at that. Look at that.
So
I
this
figured
is
it had to be utilities because the strength we've seen in utilities, we're not seeing it anywhere else. So I figured, so I'm cheating here using my relative strength analysis.
So it's utilities, but not utilities. This is an industrials fund, believe it or not. It's like 70% industrials, 80% industrials, but some really hot names in here. So this is an area that's working. I thought that was.
It is 56% industrial. So half of it is industrials, 8% basic materials, 10% tech, 14% utes.
That's what
utes.
Utes. Yeah. All right. So water utilities, not really utilities. It's actually called water resources ETF. I don't know why I keep calling it utilities.
Yeah, but they're like industrial stocks that have to do with utilities. So for example, you've got Danaher, right? You got Roper Technologies. Then you got American Waterworks, AWK.
I mean, listen, they tell me water's important.
Wait, can I ask this other question?
Please.
Can a company be in more than one industry group?
Well, usually they are.
I mean,
like it's not like so pure.
Not
you know, like in some cases it's very obvious they're a software stock.
It would have to
what
be,
if they're
right?
a software stock for transportation like Uber?
Right.
So Spencer, I don't know how you're asking the question, but like yes, in my mind, but no if you ask MSCI, right? They're not like
Or the gigs. Yeah, the gigs
Group.
decide, but to
the
Spencer's
whole reason
point,
of having groups is so that you can bucket things into one group.
Uber can be a consumer discretionary stock. It could be a transportation stock, which would make it an industrial. It is a software stock, so that makes it a technology stock.
I guess I didn't realize that there was like a formal GICS for industry groups. I thought that was like somewhat subjective.
Nope.
I'll tell you what Uber is. Uber is a great company. What a great company. Just
seems
so
subjective to me.
Why don't you get him a list? I guess Spencer hasn't seen our list. Send him the list of all the S&P industry groups. There are way more than you think, Spencer. Because not all the industry groups have an ETF.
Do you look at the momentum report?
Yeah, pull up the momentum report, Spencer.
Okay. I'll look at all the
Anything we
reports.
do you even pay attention to us at all?
Are you new here, Spencer?
First
day?
Drop some industry
talking to me?
plug on Spencer, please. One more. While we're having so much fun, one more. Throw it up. So this also in our industry group ETF list. Maybe not U.S. stocks, but European financials so hot right now. EUFN. It's not a new one,
yesterday,
but it's a new multi-year high, above the prior cycle highs and above the year-to-date highs. What I'm looking for. So that one stands out.
So what you're looking at here, you're looking at 8% HSBC. Then you've got 6% Allianz. Then you've got UBS, 4%. Banco
UBS
Santander, the Spanish
just had a
one.
great day.
BNP Paribas, Zurich Insurance, Banco Bilbao Vizcaya Argente, AXA.
Yeah.
You got the Münchener Ruckerwerks, something German. I'm not going to try to pronounce some of these. The German ones really get me. Same thing with the wine. When I used to take wine exams, some of these German words like Trucken Bieren aus Lese, that's a tough one.
I don't know what you're saying.
Trucken Bieren aus Lese. You know how long it took me to be able to spell that and pronounce it?
It sounds like you're saying truck and beer.
It's Trucken Bieren aus Lese.
All right. I don't know. You've lost me. I don't.
What else?
Let's go back to the earnings. We have a couple more.
The Germans, especially back in the day, were very anti-elitist. So they didn't want to do things the way the French did. They wanted to do it their own way.
The closest I ever came to like being able to speak German was when we got to pick our language in school, and the teachers would all come around and like pitch the kids like take French, take Italian, take Spanish, take German, right? And the German teacher was like by far the coolest guy. And I was like, Mom, I'm taking German. And she was like, no, you're not.
That's funny.
Wavy, you drive me crazy sometimes. Uber's very profitable. Last quarter, they announced a $7 billion share repurchase program. You can't do that unless you're making money. So they did flip to an unprofitable bottom line number this quarter because of the equity investment write-off. But yes, they are a cash machine. They're a cash cow. I think they had like $5 billion in free cash flow over the trailing 12. So all good things.
Can you throw up the
it wasn't
hot
all
corner?
good things, Steve. Again, the stock is down because the guidance was a little bit light. It wasn't all good, but by and large, okay.
Hot corner, please. Can you?
I don't really have much today for you guys.
I do.
You didn't want me to finish my earnings?
No, we're doing earnings, JC. We have important earnings reports to hit.
Talk
Shopify.
about big purchase on Aon. I'm into
Can we
that.
talk about Reddit? We have Reddit, which is up 7%. Well, I mean, it's dropping now, but it's still up 7% this morning.
We don't have earnings bumper anymore.
If there's a VWAP drop there, you'll see what's going on here.
First Report is a public company.
This is just seems to me like a read on the broader advertising space.
Exactly, Steve. Exactly.
Right? Like that.
Yes.
That's what it sounded like. I took a quick look. So what else you got?
That's exactly right. So
can you explain that to us mere mortals who have no idea what you're talking about?
Advertisers their budgets are increasing. They're spending that money.
Got it.
Right. So Google and Meta said as much, right? In their reports, they said the online advertising market has rebounded from a year ago. Reddit makes the bulk of its, I think maybe all of its revenue right now from advertising. So a strong ad market is good for Reddit. We should also add that they added more users than the street was expecting last quarter. Their daily active users, they have about a little under 83 million versus the 76 million that the street was expecting. So good report. Again, stock is up this morning for now, at least. Intel, bit of a disaster here this morning on their report. What else is really new there? What is the stock down now?
I mean, it was down a lot into the report, though, too.
It's only down 2%, but it is Intel after all. So
it's awful.
Hard to get that thing to move. Oh, it wasn't earnings. I'm sorry. It was they had a license revoked by the U.S. Apologies. So Intel down 2%. Disaster of the day is TripAdvisor. They are not going to sell the company, so that's down 31% right now. They had also had earnings, but the big news is they're not going to be acquired by anybody. So TRIP 31%. At least it was last I checked. And Lyft's report was not bad. The stock was up slightly last I checked it. Yeah, it's okay. It's wow. Now it's up almost 10%. But Lyft's report was good. As Steve said,
Uber above 66, by the way.
Dude, it's at the highs of day. I'm sitting here watching it. It's coming off that October low VWAP that it also found support at in January. This is perfect. I mean, this is where you want to enter a chart like this, I think.
Lyft, I'd rather buy a breakout if I'm going to be in this name. But
if you're buying weakness, this is where you buy it, though, right?
Uber, not Lyft.
Yeah, I'm not talking about buying Lyft.
Yeah. Well, we're looking at a chart of Lyft. So
it's up 10% this morning.
I'd rather pay more.
I was looking at a chart of Uber.
Okay, fair. Couple more disasters. Zoom Info, which is down like 25% this morning. Soft guidance for ZI. And what else was on my earnings list? I mean, there's so many, but I think those are the big ones. Ring Central up nice this morning, up about 12% on their report. Dutch Brothers up 10%.
Yeah, big move from Ring. You're right.
Mm-hmm.
Can we go see this big purchase in Aon?
Yeah. Last thing tonight: Airbnb, Robinhood, HubSpot, The Trade Desk.
Hey, people are drinking Bud Lights again, JC.
Did they stop?
I guess so.
Okay. Hot corner.
Up 5%.
So hot right now.
I mean, this gotta be this is the one that stood out to me. So you had this gentleman Lester Knight buying Aon, driving through Hartford, Connecticut. A lot of insurance. Strazza, throw up slide 2 there, Spencer, so you can see like how far this thing has come. This thing is an absolute beast.
Yep.
This
Looks
one
like,
constantly on our international Hall of Famers because it's actually not American. Is it
You know what
from
it looks
Bermuda?
like, JC? It looks
What?
a lot like an insurance company when you zoom out.
It looks like an insurance company.
Yeah, they're just
They are an insurance company.
Strong and steady chart. I know.
They're reinsurance though. They're reinsurance.
Mm-hmm.
Yeah.
A lot of them look like this, is my point. There's a lot of secular leaders in insurance. They're just slow and steady. Quality companies.
This thing is a beast. So this guy Lester Knight, I'm not seeing him in the key executives, so he must just be an insider. I don't know this particular gentleman, but 2 milli, buying this dip in this range bound market. Do you accumulate down here, or is this a top? Is this a major top and end of a secular trend? Right? That's how I think about this. You want to bet that this is the end of the secular trend, or are we nearing the end of this multi-year consolidation in the lower bounds, by the way?
I think you want to bet on ranges like that, or some could draw this like a little top, not resolving lower.
That's what I'm saying, right? So this Lester Knight must be seeing the same thing. Shout out, Lester.
Real fast. Aon. What, did they already report?
2.7 million bucks. That's not nothing.
Yeah, they already reported. So never mind.
Lester B. Knight.
Couldn't you just say if it was at the high end of that range, you bet on the breakout, and if it was at the low end, you bet on the top?
Right, but this guy's buying that dip, right? This guy's buying the weakness.
Yeah. Or what Steve said, which has just been on the range.
He's a healthcare guy. He's the former vice chairman and director of Cardinal Health. So
That's right.
this guy seems to be just well informed in the business of insurance. And these reinsurers just print cash. So he must be like, okay, this thing's done nothing for 2 years more. This thing's done nothing since we're going on almost 3 years since this thing's done nothing. And he's like, all right, it's time to be buying down here. I appreciate that. I see you. I see you, Lester. See you, dog.
All right. Yeah.
Boring for you guys?
A little bit.
Printing money is not, are you not entertained?
Yeah, they're not really bull market stocks for me, but they're good stocks. Insurance.
Line go up.
Not recently.
That's why Lester's accumulating down here. $2.7 million. It's not like nothing from a guy who knows his shit about insurance. I'm just saying. Something to think about. Messy chart.
There's better insurance stocks out there.
We got A-Mark Precious Metals earnings, Spencer. Do you have the headline numbers there?
What? Yeah, whoa. Hold on a second.
It's really
I do not have that one handy. Give me a minute.
gap down this morning, and it's just already rallied like $2 here this morning. Paring back some of those losses.
Yeah, I had it
under
down
$1 billion.
14% in the pre-market.
Slightly under $1 billion. This is a capital market stock.
Yeah, this is a squeeze name. Heavy short interest here. This is a precious metals dealer. We're really interested in this one for a number of reasons right now. It's got a big multi-year range. It's just poking its head out of. Looks as though it's not quite ready yet. All right, so I'm seeing a pretty big miss here, Spencer. I'm seeing EPS of 21 cents versus an estimate for, almost 74 cents, or I'm sorry, 77 cents. And the revenue actually came in much higher than estimate. So maybe something's going on there, and the market's trying to figure it out right now. Usually when you get a top line beat like that and then a big bottom line miss, there's some sort of extraordinary item, or at least an item that's non-operating, not in the standard course of business.
Yeah. That EPS number was such a big miss that there was some unless there wasn't a big adjustment, unless they really did miss by 50 cents, which would be
throw up the slide 2.
You shouldn't miss by 50 cents if your revenue beats by 500 million, though, right?
Yeah.
That's something's going on there.
See that? This is what this thing looks like longer term. Looks clean, man. Looks clean. I want to buy that breakout all day. So this is technically a capital market stock, technically not a material stock, because I guess they're not taking anything out of the ground. They're just slinging, right? They're just a dealer.
I think their closest comps are pawn shops. We've talked about this. Thinking pawn shop.
Is there a pawn shop ETF?
No, but we have publicly traded pawn shops. I always forget the goddamn ticker.
There's a few publicly traded pawn shops. They're all like little market caps.
2, maybe 3 of them out there.
Yeah. We should create a pawn shops index.
There's probably information in those stocks.
How many could there be exactly?
There's a handful.
Yeah, right.
First Cash. That's the one I'm thinking of. First Cash. FCFS. Yeah. 3 pawn shop stocks. Cash America, CSH. The old article. Never mind. I'm not reading it. All right.
Oh,
what else?
We got some feedback from yesterday's show that we should acknowledge the market open. So here we are, 18 minutes later, acknowledging the market open. Hey, we're open, everybody. JC, how we doing out there?
Why don't I just give an announcement for everybody? So the market, ladies and gentlemen, will open at 9:30 every single day that we're doing a show. If we're on here doing a show, the market's going to open at 9:30 Eastern time. That's 60 minutes into the beginning of the show. So I don't think we really need to announce it outside of that. I think that kind of covers
I'll get a little opening bell. How about that?
Yeah, we got a little opening bell, and they're off this morning. 20 minutes into the open, we have the Dow futures doing absolutely nothing, down 0%. Then we've got the S&P futures down about 0.25%, about 10 points. NASDAQ futures down 0.25%, about 40 points. Bond futures down 0.25%. 30-year bonds down towards the lower range of 116. Silver flat, gold flat, copper down 1.5%. Then you've got crude oil down less than 1% now, right around 78. Dollar mix in early trading, yen getting killed, and the volatility index right around 13.25. And nothing really happening in the old funny money. I was looking at some of these meme coins earlier to see if anything's interesting is happening there. Nothing. Bitcoin flat, 62,000. Ethereum pretty much flat, 3,000. Solana pretty much flat, 147. Total crypto market cap, 2.23.
So I bought a stock yesterday.
Did you? Mm-hmm. You buy stocks?
I buy stocks. I bought 2, actually. 2 millennial brands that have earnings this afternoon. And it's not as much an earnings call as I don't want to miss a move kind of call. So I didn't buy
Is one of them Robinhood?
One was Robinhood. Yeah. With Robinhood, it's simple for me. Coinbase's report was just so good, and Robinhood's business is not exactly like Coinbase's, but at least their growthier part of their business is coming from crypto. Coinbase is a great read for Robinhood. So I don't see why they wouldn't have a pretty excellent quarter as well. And I don't see why that Robinhood chart wouldn't start to look more and more like Coinbase's or like some of these companies that are out here making money on this crypto.
Can I guess the other one? I think I know.
Yeah, go for it.
Duolingo.
No, big millennial brand reports this afternoon.
Duolingo is that almost all-time highs here. Close. Yeah, well, it can only be Airbnb then.
Ding, ding, ding.
Yeah.
Listen, I like the Airbnb story. I don't think Airbnb is going anywhere. I love the idea of investing in great American brands for the long term. Right? Don't ever bet against the American consumer. We spend so much money; it's disgusting. So Airbnb, so this will be a longer term hold. The base is in. Just a lot of choppiness since last summer. Kind of same level we were last August. So again, not full positions, but this is just Robinhood is not a long term bet. To be clear, Airbnb probably hold this.
Right.
Great American brands.
Great American brand.
Here.
JC's not going to say anything nice about Airbnb. He's biased. Should I tell him why?
You can, but that's not going to stop me from buying the stock, for the record.
He's been banned. He's been absolutely banned. He breaks everything in these houses. They kicked him out. They kicked him. JC banned from Airbnb since 2021.
This is fact. This is fact. But it wasn't my fault. It wasn't my fault.
But it's.
I open the doorknob falls off. I sit down on a chair, legs broken, chair breaks. This is wall within like 15 minutes of me walking in.
Everything he touched for like a 10-minute
and
period.
then Giancarlo left the door open, also not my fault, and then kicked out of Airbnb.
I don't think I knew the last part.
Yeah. Giancarlo left the door wide open, unlocked, just left, and Airbnb was not thrilled about it. So I'm banned from Airbnb.
There's a very different dynamic now when we travel together. Giancarlo is in charge of booking the Airbnb, but then he also turns into like the Airbnb Nazi. We'll be like,
right, because he doesn't want to get banned. I literally open the doorknob falls off. I sit down in a chair's broken. This is like within 5 minutes of me walking into the house.
It was a great moment. Yeah. It was very fun.
So I can't even order my own Airbnb anymore. I love Airbnb. I got no beef. I think we need to sit down, me and the Airbnb executive, and iron this out, meeting of the families. This is unacceptable.
They got to let you back, right? Like, it's not a lifetime ban. They got to let you back.
I just do it through my wife's account. It's all good. Yeah. Or when it's for work, I do it with Giancarlo. No big deal. It's workarounds,
So listen,
I think they just somebody was out to get me,
And I agree with stock market Mike, hotels over Airbnbs. That's my policy, but I recognize
because you don't have any kids, Strazza. You don't have any kids.
Yeah, I get it. If you're single or if you're traveling with just two people, hotels. Your life is easier all day.
For sure. But when you have an army of children like I do,
there's a time and a place for an Airbnb.
Time and a place for both. It really just depends on. It depends. It depends.
When we travel in big groups, sometimes Airbnbs are awesome. So yeah, it's good.
Hit that bumper there, Spencer.
Alrighty then.
No kids. Nope.
All right. So I was just in the Berkshires this past weekend, and there's a wine shop there that I've talked about a whole bunch here on the show. It's right around the corner from the Red Lion Inn in Stockbridge. So highly recommend. They got some kind of hustle going on there in Massachusetts where you can get, good juice at cheaper prices. It's not like in Pennsylvania where I live. You got these communists that don't allow you to buy anything good. So go to that slide 2. So this is a Cornas. So if you like Syrah, the north of Rhone is where Syrah is originally from. If you love Syrah from the north of Rhone, like I do, and you talk to other people that like Syrah from the north of the Rhone region in France, a lot of them will tell you that Cornas is their favorite. I am also one of those people. Love Cornas, and this is a 2015 that I got for like $40-50 or something like that. This is a 9-year-old Cornas. Hard to get, hard to find, and I had a great time there in the Berkshires, going to my favorite wine shop.
So I'm getting good at wine, and I can tell by the bottles now. I could tell this is an expensive one.
No, well priced. Well, I mean, it should have been more expensive. I mean, I'm not going to tell them that, but probably should have been twice as expensive.
At least $80.
Wait, how
I
can
would
you
have said
tell?
over 100 easy. I probably
How can you
paid half
tell?
that.
How can you tell?
Really?
What's a 2015 Cornas?
The labeling, the logo. It's classy. There's not like a picture of Snoop Dogg on it, right? Like it's not. I know it's not a $15 bottle of wine. No. What?
Well, you can look at the vintage. First of all, it's a 2015.
Yeah, I see the year. You can read the year, Spencer. That's another identifying characteristic.
Kornos is a very unique,
Okay.
special place. So there's not a lot of it. So it's a supply and demand thing.
What do you drink this kind of wine, or what do you eat with this kind of wine?
It's a great freaking question. You could drink it on its own because it's not like this American New World, plum juice, fruit bomb, right? It's something lighter, easy to drink, so you actually don't need food with it. Syrah known for their pepperiness, so like a pepper steak, or maybe some kind of duck or chicken, things with pepper. Like when I think Syrah with food, you want black pepper, like whatever protein, like a peppercorn, like a peppercorn filet mignon. Like if you're one of these people that eat filet mignons, like a peppercorn crusted filet, or a pork chop, maybe a pepper, but something black peppery. Yeah.
Okay.
Or just drink it and shut up. That's what I did.
JC's spirit animal is a 1980s hair metal guitarist thrashing hotel rooms. That was a good one, Dawson. I could see that.
I am very well behaved.
I don't know.
So well behaved. I would say one hole, not a steak or poivre. No. Too creamy.
All right. My recess is to check out the link at the top of the chat and also at the top of the description on YouTube. That is for our live event today. JC and Sean talking about options and more importantly, income generating strategies in, shall we say, not strong bull markets, which is what we've been in.
First of all, you can find these opportunities in any market.
Yeah.
Messy
right.
markets, they show up more often.
Right. So the link is in there. Check it out. JC, Sean, today, 4:00 Eastern. Be there. That's what I got.
Cool. See you
I
there.
don't have a recess. Go Knicks.
I'm okay with the Knicks winning.
Oh, wait. I should know this, but I don't. Is there a game tonight?
Yes.
Okay.
I'm
Game
rooting
2
for
is
the
tonight.
Rangers more than the Knicks, for the record.
Noted.
Go Rangers.
Rangers game crazy last night.
I
Overtime.
I will have you know, I watched all of the first overtime. And that's all that I
I
watched.
stayed up for it. These guys are playing hockey for like 5 hours. I'll stay up for that. It's crazy.
I don't even like the Rangers.
I do.
Whatever. All
I
right.
do.
That's what we got.
Bandwagon.
Thanks to Adam Koos. Thanks to all of you in the chat. Smash the like. Go make some money. We'll see you later. And it's Wednesday. Hot Corner with Strazza at 1:00. Be there for that too.
Hump
Adios.
I can't take no loss. I don't even know what it costs.